What's up guys, and welcome back to the We Are Investing channel, a channel that is dedicated in investing and personal finance. On this video, we are going to go over 3 stocks that I think are a top buy this week, or at least you should add them to your watch list. Now, we have positions opened up in 2 of these stocks, and we look to add another position in the 3rd stock that we're going to be talking about on today's video. Now, before we proceed any further, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Turn that baby blue. Goes a long way in helping the channel grow, and I really do appreciate it. Also, please be aware that there is a Patreon page for this channel. I will provide a link down below if you're interested in joining. When you join, you get access to a Discord server of around 200 members, and we also post all of our trades on the Patreon so that you can follow the portfolio in real time. Now, with that being said, let's proceed into the video. But first, let's drink some Guinness. It is beer time, my friends. Let's go! Alright, so this was a really good week for the We Are Investing portfolio. We had a Santa Claus rally heading into Christmas. The portfolio was up $18,991 just last week. The top 5 gainers were Leslie's, THBR, LCA, BFT, and Virgin Galactic. I've done videos on all of these stocks, and I posted about all of these stocks on the Patreon. Now, for the month, we've made crazy returns. The stock market has been absolutely insane. We are making so much money. A lot of people are making money in this very bullish market. I don't know how long the market is going to continue on this bull run, but right now we are very happy and we'll take these gains. For the month, we are up $46,151.41. The top gainers for this month include Leslie, ticker symbol LESL, which nobody else is talking about, but that is completely fine. I will take these gains and I will be the only channel to cover this stock. I am completely fine with that. We also have Callaway Golf. Not a lot of people are talking about that stock either. We got BFT. That does get a lot of attention. We got Nintendo. Tell me another stock channel that is talking about Nintendo right now. Nobody. But we're talking about it, and we will take those gains. And we also have THBR. There are channels talking about that because it is a SPAC, and SPACs get so much attention. But if you look at our list here, only 2 of them are SPACs, BFT and THBR. The rest are solid companies in my personal opinion, and that is why we are making a ton of money with low risk, and that is the strategy that we like to imply for our stock market investing. The first stock that I want to talk about is Lancadia Holdings, ticker symbol LCA. We are up 16.75% for a total gain right now of $3,543. Now, if you look at the 1-month chart for LCA, you can see that the stock is up a lot. It is up 74.71%. The stock is currently trading at a share price of $25.49, and the 1-day high was $25.57, and that corresponds to the 52-week high at the same price of $25.57. So the stock is trading at all-time highs right now. It might be a little pricey, but I definitely think that the stock can continue to go up because we have a looming catalyst that's going to happen this week that could drive the share price even higher. And that catalyst is that on December 29th, you're going to have a shareholder meeting to vote on the business combination that will convert LCA over to Golden Nugget. It is a business combination that will merge the SPAC with the business target, which is Golden Nugget Online Gaming. Now, this is not the first shareholder meeting to approve this business combination. The first shareholder meeting happened a little bit ago and was not approved. So they're doing another one on December 29th. However, good news from this is that they are changing the voting requirements. Prior, it was based on a sheer amount of votes. They had to reach a number. They had to get X amount of the voters to vote for the shareholder meeting. And they did not get that number. And they have amended the voting requirements for this business combination. Now, it's not a matter of sheer votes. All that matters now is that the percentage of votes that are cast have to be in favor of the business combination, which I am pretty sure is going to happen. Because if you look at the numbers from the last meeting, the majority, overwhelming majority of votes that were cast were in favor of the business combination, and I believe that is going to remain true for the second shareholder meeting that we're going to have on December 29th. A lot of these SPACs as of late are seeing a huge pop in the share price following the business combination and following the merger. It doesn't happen right after the business combination is complete. It seems to be happening after the tickers change over, which is a couple days after the business combination. But that puts us still into this week, and this week is going to be a very important week for LCA moving forward. Do we see a huge pop in the share price, or do we see a drop? Odds are that we're going to see a pop, and that is why I like this as a swing trade. However, I am not tied to this stock. If the stock starts to go south following the business combination, I will sell, I will lock in my gains, and I will move on to a different stock. Now, the second stock that I want to talk about on today's video is Alibaba, ticker symbol BABA. We opened up a position on this stock on December 24th. We are up 4.20% for a total gain of $447.50. And we posted this trade on the Patreon as soon as we made it. Those are some of the benefits that you have when you join the Patreon. Now, if you look at the 3-month chart for Alibaba, ticker symbol BABA, traded on the New York Stock Exchange, you can see that the current share price is $222. But over the last 3 months, the stock is down 18.67%. And check this out, on Thursday, Christmas Eve, the stock dropped 13.34%. It actually dropped more than that, but it started to recover a little bit. And I think that this was an early Christmas present for investors. And if you look at the day range for this stock, it dropped to $211.23. And if we zoom out and take a look at the 1-year chart, we can see that the RSI is under 30, indicating that the stock is oversold. And we can also see that we pretty much touch a support line on that 1-year chart. And that is why we opened up a position in Baba. But Alibaba dropping so much does not come without risk. There is news out on this stock that could drive the share price even lower. The Chinese State Administration for Market Regulation said that it's investing the e-commerce giant over a policy that forces merchants to sell exclusively with Alibaba and skip rival platforms JD.com and Pinduoduo. Now, with that being said, there is risk embedded with Alibaba stock. Because of this news, I don't know where the stock is going to bottom out at. So this is the strategy that I'm going to put into play with Alibaba stock. This is what I'm doing. I'm not telling you what to do. I'm not telling you to invest in any of these companies. I'm just giving you my personal opinion. But when it comes to Alibaba and this news, the way that I look at it is that Alibaba is a huge company. It is a good company. It is a huge player in e-commerce, which is so important moving forward, and it is the future. So with that being said, I think that this is a good stock to invest in. However, what is the best price to get into Alibaba? I cannot answer that question. I do not know. Looking at the 1-year chart, I like the $212 range, so that is why I entered into a position. However, it is not a full size position because I do not know where this stock is going to bottom out at, and I don't want to enter into a full size position right now, have the stock continue to drop, and then I am screwed. So what I did is I entered into a position which I can add to, and that is what I like to do in these current situations. Usually there is a 3-day trading rule where after 3 days all of the news is built into the stock and it could start to rebound. But stocks like this could rebound really quickly, and we might have already saw that on Thursday. So I entered into a position that I can add to. If the stock continues to drop, I will continue to add to that position. Whether it's a half size position, a 3/4 size, a 1/3 size position, that is what you have to decide for yourself if you're going to invest in Alibaba. But I definitely like the approach of leaving some on the table so that you can add to this position if it does continue to drop. Because at one point, I definitely think it's going to start to rebound because it's just too big of a company, too big of a player to not be valued appropriately. And speaking of valuations, according to Tip Ranks on 22 analysts, the average price target 12 months for this stock is $338.47, and that implies a 52.53% upside, and the high range is $365. And if we look at some multiples, the PE ratio for Baba forward looking is 21.43, and if we compare that to its competitors, let's take a look at Amazon. They have a forward looking PE ratio of 90.9. If we look at Mercado Libre, which is the Amazon of Latin America, they have a forward PE ratio of 1,143.68. And if we look at Shopify, another e-commerce player, they have a PE forward-looking ratio of 333.66. So I definitely think that there is upside for Alibaba, and the valuations, when you take a look at the multiples of some of its competitors, are indicating that Baba is undervalued right now at the current share price, and that would also be seen in the charts because there is a big dip in the share price. Now, for the third stock that we're going to talk about, we're actually going to be talking about a sector. We'll name some stocks in this sector, but I want to talk about the financial sector, particularly banks. I definitely think that this sector is going to be a strong sector in 2021, and that is why I think you should add some of these financial companies into your watch list. Financial stocks, as represented by the financial sector SPDR ETF XLF, have underperformed the broader market, providing investors with a total return of negative 4.6% compared to the Russell 1000's total return of 20.6% over the past 12 months as of December 16, 2020. And we got news this month regarding some of the biggest banks that could be driving the share price even higher. Feds are allowing banks to resume share buybacks. The Fed announced on Friday that it will allow the nation's largest banks to resume share buybacks in the first quarter of 2021, subject to certain rules. The partial relaxation of its buyback ban came after the Fed's second round of stress tests in 2020, and JP Morgan Chase announced in the minutes after the Fed's test results that its board had approved a new share repurchase program of $30 billion. This was reported on Friday, December 18th, so it was last week. And a takeaway from a Seeking Alpha article states that bank stocks were hit hard during the crisis, but their operations held up surprisingly well. Large banks didn't see their profits drop to zero, and their book value continued to rise. Buying up shares during the midst of the pandemic has been a great move, and with now relaxed buyback regulations, there is further upside potential. Many stocks still look inexpensive despite solid gains over the last couple of months. This is true for the large banks, as well for many regional and small banks and some non-bank financial corporations such as credit card companies or insurers. Now, in this sector, in my personal opinion, I like investment banks, Morgan Stanley, Goldman Sachs, and I also like digital banks like Ally Banking. Those are the stocks that I prefer. However, this sector has a lot of players in it, and you can also get exposure through an ETF. The ETF is XLF. If you look at XLF, you can see that the stock has lagged the overall market. And over the last year, this ETF is down 5.42%. However, if you're bullish on banks long term during this rebound and in 2021, this would be a good sector to put some money in. Another stock that a lot of analysts seem to like in this sector is Morgan Stanley, ticker symbol MS. It currently trades at a share price of $68.09. And if you look at the max chart, this is backing up to the IPO. You can see that the stock is up 751% since its IPO. But that is not what is important here. What is important here is that the stock seems to have broken out. So with MS, I would be a buyer on a pullback. I wouldn't buy into the current share price. I think $60 will be a strong support for this stock. So at $60, I'm going to set an alert. If MS touches $60, I'm going to reevaluate and I might enter into a position in Morgan Stanley. If I do, if you're a member of the Patreon, you will be notified as soon as I open up any new or close any new position. But overall, I think the financial sector is a fine sector to be invested in for 2021 as we reopen the economy back up and as these share buybacks proceed. So with that being said, guys, that wraps it up for the top 3 stocks to buy for this week. If you like this video and the content that I am providing, please consider hitting that subscribe button, ringing that bell, and smashing that like button. It goes a long way in helping the channel grow, and I really do appreciate it. Do not forget there is a Patreon page. We also have a Facebook group, and there are promotional links to Webull and Robinhood down below that can get you 2 free stocks worth up to $1,600. And also, if you refer Webull to 2 friends, you will get an additional 10 free stocks on top of that if you use the links that I have down below. But outside of that, guys, you know the deal. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together, we are invincible. See ya!